You've heard of all the different ways you can invest into real estate. You may have even started investing in real estate yourself, but I want to talk about the holy grail of real estate, which is multifamily investments. I'm Veena Jetti, and today we're going to go over the 5 reasons why multifamily investments are some of the best investments you can make. We know that there are so many different asset classes that you can be invested into, but the holy grail of real estate is multifamily investments. And I'm not just saying that because I've transacted on over $800 million in my portfolio. I'm saying it because there are so many benefits to being invested in multifamily, and everybody should have it in their portfolio. One of my absolute favorite reasons that I invest in multifamily assets is because of the appreciation on the asset. Now, the value of a multifamily asset is a little bit different than how we would value a single family home. With a single family home, you would value it by what the other homes in a 1 mile or half a mile or 2 mile radius have sold for in the last 6 months. So your neighbor's decision to sell their house at a discount could literally impact the value of your house. So let's talk a little bit about how multifamily is valued and what the formulas are to get there. So in order to find out how much we can force appreciation on an asset, let's dive into how we value an asset in the first place. So there are a few key phrases you want to know and understand in order to do quick back of the envelope math. So the first one is going to be your NOI. This is your net operating income. When you hear someone saying below the line or above the line, the NOI is the line that they're talking about. So this is simply going to be your total income minus your total expenses before. This is total expenses, so your operating expenses. So this is before your debt service, and that's going to give you your NOI. The second term that you want to understand is the cap rate or capitalization rate. So your cap rate is simply what the yield on and your investment would be. So knowing these two numbers gives us the ability to find out what the market rate of the asset is. So the way we solve for market value is we take the market value on one side of our equation, and it's equal to your net operating income, which again is your total income minus your total expenses, divided by your cap rate. Now, let's say you're trading on an asset in a Class B asset in Atlanta, and I'm going to be optimistic, but let's say your cap rate is equal to 4%. Okay, and let's say your NOI on your T12, your trailing 12, which is your total income minus total expenses, is $1 million. So if you take 1 million and divide it by 4%, you're going to get a market value of $25 million, which let's say you buy the asset here. Now, let's say you go in and you increase the NOI by increasing your rents by $100,000. So now, instead of your NOI being 1 million, your NOI is going to be $1,100,000. Now that $100,000 isn't just an additional $100,000 in income, because when you're looking at the appreciation and calculating the appreciation, the way that we're going to calculate that is we're going to take $1.1 million divided by 4%, and you're going to get $27,500,000. So by just increasing your net operating income by $100,000, not only have you increased your cash flow by $100,000, but you've added $2.5 million worth of value to your asset in a forced appreciation scenario. If the math of forced appreciation wasn't enough to already convince you that multifamily is the best asset class, we also have a dependable income stream. Apartments are real tangible assets, and therefore we can provide regular and dependable income streams, and they'll provide positive cash flow, which is generally going to yield higher returns than the stock market, especially if you compare it over the last several decades. Another major benefit to multifamily real estate is the tax benefits. This is one of the most tax-efficient investments that you can possibly make. The U.S. tax code benefits real estate owners with no limits on mortgage interest deductions, and accelerated depreciation shields a portion of the cash flow generated and paid out to investors. At the time of sale, the IRS also allows investors to participate in a 1031 exchange. This allows investors to exchange another investment property and defer all taxable gains into the future. And you can continue doing that, so you can continue deferring your gains. So there are a lot of different tax benefits and efficiencies to investing in multifamily assets. The fourth reason why multifamily is one of the best investment opportunities is because you get economies of scale. Multifamily real estate is suitable for investors who want to build a large portfolio of rental units more conveniently and in a shorter amount of time. For example, think of the difference between having 20 single-family homes versus having one 20-unit asset. You get economies of scale right in one location. When I first started investing in real estate, I actually started investing in single-family homes because that's what I had seen my family do very successfully. And they got to scale, but it took a lot more work, and they couldn't quite scale up to the level that I've been able to scale with multifamily. So there was a point in time where I was buying, I think, like 5 units a day, 5 single-family homes a week. Sorry, not a day, a week. I wish I was buying 5 a day, but I was buying 5 a week. And even buying 5 a week, I was so busy. Now, a couple weeks ago, I just closed on over 400 units in one day in one transaction. So the difference is you're able to really scale your portfolio larger, faster, and you also get to realize the benefits of having more units in one location. So when I say economies of scale, that also refers to us being able to get better contract services. So we're able to reduce our costs of operating the asset by having all 400 units in one location versus having 400 units all across the county or all across the city. Additionally, when you get to about 70 to 100 units, that's really the sweet spot because you can justify the cost of having a porter or on-site maintenance, and then you don't have to worry about answering every call about leaky faucets or a light bulb needing to be replaced. You can have a property management team that's on site to do that for you. So economies of scale are really, really important, not just to grow, but also to be more efficient with your time. The fifth reason why multifamily investments are one of the best investments you can make is because of the multiplier effect. With the right target locations, you can benefit exponentially as rents increase, which cause a rise in apartment values, and it increases your cash flow too. The locations that we target as of right now, and they always change, are North Carolina, South Carolina, Florida, Georgia, Arizona, and Texas. As we continue to see rents rising in those areas, especially as a result of renovating and beautifying our properties, we see an increase in the value, and that's what we call forced appreciation. If you remember earlier, we went through some of the formulas of how you can calculate the value of a multifamily asset. So by utilizing multifamily, you get the multiplier effect in many ways, not just on your NOI and cash flow, but also on the balance sheet and what your appreciation looks like. Although there are so many different sectors of real estate, we've just gone over the top 5 reasons why multifamily is the holy grail of real estate investments. If you enjoyed this video, click the link below to learn more about multifamily investing. Thank you so much for joining me in this video. If you enjoyed learning about the top 5 reasons why multifamily assets are the best investment class, subscribe, ring the bell, and watch my next video.